Hello traders, Gary Wagner here. It is approximately 10:30 in Honolulu, 4:30 in New York. It is Tuesday, the 18th day of September 2012, and this is the daily report for gold and silver. After a small correction and downside move in the market yesterday, it seems as though we are gaining most of it, if not all of it, back. As you can see, current print on the screen, 1773.60 puts it up about $9-10 on the day. We have a low of 1750.20 and a high of 1774.70. So you can see we're trading right on the highs. Can't quite see it in the Henkin candles, but we do have a green candle after turning red. One, and secondly, the nice thing that I am very pleased with is that I believe that we need to really hold over this 1750 area, and as you can see, we have had lows that have touched close to that area, but it really hasn't breached into it significantly, and to me that's a good sign. Silver, an engulfing bullish right after having a down day as we saw yesterday. That is trading up sharply this morning, 56 cents higher. As you can see, well above $34 per ounce at 34.77.78. It's up almost 2%, 1.64, with a low of 33.90 and a high of 35.17. We are looking at a cash market chart, daily chart, standard candlestick format. Of course, we've been using this chart as our Elliott wave count, along with the compression triangle, which we identified back a couple of months ago. Obviously, we have maintained a good move above that. And what I'm looking at right now in terms of our levels of resistance, let me try to draw this as clear as I can. This is about 1803, and as you can see, we're about $30 really shy of that point. My sentiment is, as long as we can hold above really the 17, call it 50 area, which is where I've identified an area that needs to hold for support. And as you can see, I'm really basing these different areas on recent tops and bottoms that we have seen in the market. I think we have a good opportunity to see this market trend a little bit higher. And if we're going to find some resistance, or I should say when we'll find some resistance, that might in fact be the point that we want to look for as a logical place. You know, the one thing, especially in Elliott wave charting, wave one is really our benchmark wave, so that until we really complete this wave, let's say that it does make it up to 1800, once we have this benchmark right in here, we can then look for a percentage to take us down for our wave two, like that. Then we'll look for our wave three, and we'll base our wave three on a couple of different calculations. Typically, wave 3.1, it cannot be the smallest, so it's going to at least be the size of wave 1, but it can be anywhere between 1.23, 1.38, even as high as 1.61, which is standard Elliott wave, 6.1 higher than 1, and that's going to really push this market, and could push this market really past these record tops, 1920 right in here. So I think that over the next couple of months, we're going to have some really interesting activity within the marketplace itself. Now traders, basically this is pretty much the same chart. It's got the Elliott wave count, does have some Fibonacci, but I want to go ahead and blow this up. And the reason, and what I'm really looking for, and what I want to show you, is that what we have seen in this marketplace is now getting very similar to the activity that we saw within silver, and that is it will go to a certain area, and rather than having a real strong sell-off, it basically consolidates and then has that another spurt, that spurt up, consolidates again. And the reason that I'm bringing this up is because this just last retracement, and you can see that's right in here, we go in here, we had that tremendous up week last week, that up day, that's right in here, of course. And then what are we witnessing? Well, we're getting that sideways activity again. That to me is a very strong indication that this market does in fact want to trade higher. There can be no doubt about that, because we're getting these spurts, consolidations, spurts, and consolidations. And traders, no doubt the same can be said for silver. You know, on a technical basis, when you start looking at your oscillators, your stochastics, for example, relative strength index, MACD. What you will see in these oscillator-based Western technical indicators is the market's getting overbought. The issue with that is when you have a runaway trending market, they will continue to be overbought. So, for example, when we look at different markets, we will see them in overbought territory and they'll continue to move higher. I find that these oscillators in a highly trending market don't really give us the information we're looking for, because what you're seeing, as I said before, is these real nice spurts, moves to the upside. After that, you get a consolidation, you get another spurt to the upside and a consolidation, and it seems like we're getting that again. You see that the market consolidated right in here. We talked about the fact the other day that you had the core of what's called a three-river evening star. We also talked about the fact that without that consolidating candle, and a consolidating candle would have looked something like this, where you had a red candle with a lower low and a lower high. If we had seen that, that would be an indication, of course, that this market is topped. Candlesticks are very, very good at really giving us a quick and thorough indication when we have reversal or pivot points. Traders, it doesn't seem like we're getting that yet. Now, this has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.